Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. This video is the next two videos are going to be on gold and silver. Again, this is over what's been going on the last few months, and so these are all the notes that I thought were important enough to talk about in these videos, and it was more than two videos worth, so that might be a little scattered, but I think both videos will have excellent information. All of the things I talk about in these videos are really just follow-ups to the coming storm video, which there's a link to go watch that for free right near this video. I would recommend that you do that because that shows you big picture what's going on in the economy, whereas these are just what's been going on lately. Let me jump into it. Silver shortages everywhere in the spring, so you probably are aware silver shot up just massively in the early part of this year, and then it settled back down so that it's still got a nice huge gain over the last 6 months or so, but it's got a pretty big fall over the last month or two. When it was really cooking, no one could get silver. Retailers, the major mints, corporate consumers, silver supplies are really tight. So even at today's price level, silver supplies are tight. I'm going to show you some really great numbers I picked up from some great researchers that really demonstrate that. China appetite for gold and silver is booming, as is India. They are consuming gold and silver at enormous rates. It probably will not be that much longer before it doesn't even matter whether the West buys gold or silver or not, because China and India are consuming so much. They have so many people. They're a lot richer than they used to be, and all of a sudden, and they love buying gold and silver. They understand gold and silver are money. They like it, and so they're buying it in hordes. India's, on one hand, been doing that forever. On the other hand, they're doing it more and more. China, it's only been legal for them for, I think it's around 10 years, and the Chinese government in the last couple of years has really been encouraging them to do it, and so they've just unleashed this massive demand onto the market. 1997, the G10 meeting discussed gold price rigging. So GATA, the Gold Antitrust Association, has been suing the Federal Reserve, and a judge made them release some information. And in that information was revealed that in 1997 at a G10 meeting, so the 10 biggest economies in the world, were discussing how to rig the gold price. So that's, they have evidence of that. There's plenty of evidence in the past. This is not really a new thing. Documents that were opened up about what was going on in the 1960s clearly discussed the gold rigging that the Western governments were doing. So this isn't new, but it shows, as we already knew, that this is going on much more recently. Sylvan, I mentioned how the massive drop. If you look at how that happened, it started on a Sunday night. Even a lot of, I talked to a gold and silver dealer who wasn't even aware of it. I think I talked to two who weren't aware of this because they don't follow it as closely. But when it was something like 6:30 p.m. on a Sunday, in a matter of 12 minutes, the price of silver dropped. I think it was $6. That's a massive, on a $49 metal, $6, that's more than 12% in 12 minutes. That was a time in the market when no markets are open. And so they're able, within this COMEX overnight, they're able to go in and manipulate the market because there's not that many people against them. So what they're able to do is overrun the buy orders, the bids, by just selling far more than they have bids, and so it just drops the market incredibly. And that got the ball rolling. So on Monday it started going down, and then the COMEX, that was at CPM, starts raising margin requirements. At first it wasn't even successful, but they did it like 5 or 6 times. They raised the margin requirements like 180%, and they just smashed the price down. It was the most clear manipulation ever, and it just smashed the price down. The good news is the price needed to come down. It was going up far too high, far too fast, and it's healthy for a market to have those kind of dips down. It lets the weak hands get out and puts the metal back in the strong hands. What's interesting is, you might think, and some media reported, that the reason silver shot up so much was because speculators were getting just very frothy and excited and stupid and just pushing the market up, and then it came down and oh, you stupid speculators. But actually, if you look at the reports of who bought, because they have commitment of trader reports and bank participation reports, and through these reports you can see actually who is buying and who is selling, and you'll find out that it was the big bullion banks, the big manipulators who are heavily short, that were covering their short positions, meaning they've already sold massive amounts of silver that they do not own, and they were buying a lot of that back, so they were reducing their exposure to these higher prices, and they were the ones driving it up. They were actually reducing their risk. See, these manipulators are in a difficult situation. When I first had, if this is the first time you've heard me talk about this, when I first heard about the manipulators, I didn't think much of it, but it's very obviously proven. If you go back and watch the earlier videos that we've done on this matter, it's pretty much a proven fact. It was well documented, and so they're in this difficult situation now where they're heavily short the market. They're far too short. They can't get out of that situation without driving the market through the roof. So this gave us an interesting hint of what's to come, because they did, they fairly drastically reduced their short position. But their short position is so large that they really didn't put that much of a dent into it. And so anyways, that's what drove the market up. And once they stopped, it was ready to come down. The Sprott Research has done some. This is kind of the demand, or the supply numbers I was talking about. Eric Sprott did some research, and they said the top 7 buyers or holders of silver now bought more silver in the last decade than supposedly is the entire world demand by the people who put out those numbers. And of the 22 million ounces of silver in the world, the ETFs own half of that now. So it shows you that the supply is really, really tight out there. Gold rose 24 times in the 70s. So now, just talking about, a lot of people think the price of gold, price of silver have gone up too much and it's a bubble and it's ready to pop, but let's compare that to a different era. In the 1970s and in 1980, we saw the price just really skyrocket. In the 1970s, the price of gold rose 24 times. In this bull run, the price of gold has only increased 6 times from its low of 255. If it were to increase 24 times, gold would be at $6,000 an ounce. But you have to understand, the problems now compared to the 1970s are far, far greater. In the 1970s, all Volcker had to do, and it took a lot of courage and it was unpopular, but all he had to do was go in and raise interest rates dramatically, and it killed the inflation, and then it made the treasury bonds and the US dollar a good asset to hold, and it killed off the gold run that it had had. Well, today, there's no way the federal government can afford to do that because they have so much debt. Back then in the 70s, the U.S. was a creditor to the world. Now we're the world's biggest debtor. They can't just raise interest rates to 15%. If you look at the books of the federal government, the Treasury, that would put them out of business. They just can't afford those kind of interest payments. They could, but it would be printing like you wouldn't believe, and that, of course, makes the price of gold go through the roof. And again, back then in the 70s, China and India weren't the big players that they were. It's been estimated that only 10% of the world could buy gold back then, either because of laws that were in place by a lot of countries, or because those countries were in poverty. Today it's much, much different. There's hardly any countries that have laws against owning gold, and much more of the world is actually capable of buying it. So it's far different dynamics than the 1970s, and still gold hasn't run up anywhere near as much as it did in the 1970s. This is some really interesting information, 75 times more gold than silver to buy at current prices in the world, but the money going into each is 1-to-1. So that means you'd think 75 times more money would be going into gold than silver, but it's actually 1-to-1. Silver will explode when the supply just totally runs out. Again, the price is being manipulated some, or it'd be much higher already, but it doesn't really matter. I don't care. There's people that really are pushing, trying to get the federal government to end this manipulation. I don't really care. It's giving us the ability to buy it much cheaper than we ought to be able to buy it for right now, but the manipulation is going to end. They always do. But that's amazing that there's 75 times more gold than silver at today's prices, but the money going in is going in currently at a 1-to-1 ratio. Over the last 70 years, world silver stockpiles have dropped by 10 billion to 1 billion ounces. There's only 1 billion ounces of silver left above ground in the world stockpiled. There used to be 11 billion. So again, it's a very small supply. While gold stocks have doubled to 5 billion ounces. So there's 5 billion ounces of stockpiled gold in the world. There's only 1 billion ounces of silver. Which is the more precious metal? We're told gold is the more precious metal. We've always known that, and it's true. In the Earth's crust, silver is 15 times or 16 or 17 times more prevalent than gold is in the Earth's crust. But out in the world, where in the vaults where we can actually get it, gold is 5 times more common than silver. Silver is actually more precious than gold as far as what you can get your hands on. So again, very, very, very tight supply in silver. And yet silver's so cheap. So when people actually get fearful of the US dollar or whatever currency they use and they go to get some, well, a lot of people go to gold and the richer people go to gold, but a lot of people can't afford gold, so they go to silver. And there's a lot more of those people than there are the rich people. And so what happens is it makes the demand for silver explode. And we see historically when these things happen, silver does go up more than gold. But when you start to see the supply numbers that we have today compared to historical, it just shows you that we should have a rocket ship going up in silver. Okay, another Sprott number. 951 million ounces of silver produced per year versus 139 million ounces of gold. And that's both what's mined and recycled in the world. And so that's a 9-to-1 ratio of silver to gold, but the price ratio is 40-to-1. Silver or gold's 40 times more expensive than silver, and yet the amount of new silver on the market is only 9 times more than gold. So again, it shows that silver should be a lot more valuable than it is today. The same 9-to-1 ratio applies to in situ, which is basically mineable reserves. Reserves that are in the ground that mines can actually get to. It's about a 9-to-1 ratio. I think the big reason for that is silver is usually a byproduct metal. It's usually not, I guess the way it's found in the ground, it's usually not the first thing they're going for. So it's usually they're mining copper and they get some silver, or they're mining nickel and they get some silver. And so there's only a 9-to-1 ratio there. Again, the current ratio is about 40-to-1. 64% of silver is used in industry though. So when I say it's 9-to-1, 64% of that is used for industrial uses like your plasma TV or your solar panel. Or if you've got an old-time camera still, they use silver. 10% for gold. So 15 billion a year in silver is available to investors versus 186 billion gold. That's a 1 to 13 silver to gold ratio. So that's almost the exact opposite of the ratio of what's found in the ground is what's new available, silver to gold, in the current year. Again, showing silver, just looking at this and not really thinking about the fact of historically silver's not as valuable as gold, or yes, if we had all the metal in the ground available to us, then silver should be should be 15 times more expensive or cheaper than gold. But if you look at what's produced every year, silver should be more valuable than gold. I'm not saying if prices ever got that close, people would find more silver out of the ground. I'm not saying that's ever going to happen. But it gives you an idea of how valuable silver really should be. Stockpiled supplies of silver to gold estimated to be 1.2 billion silver ounces versus 2.2 billion ounces of gold, or $52 billion versus $3.3 trillion at current prices, 1 to 63 ratio. Again, I'm making the same point in different ways using different numbers. It's just unbelievable numbers. I'm going to do another video on gold and silver. I've been going long enough, but this is some exciting stuff, and one of the reasons really I want to make sure and do these videos rather than throwing them all in the trash. Hope you're enjoying this. I'll see you in the next video. Thanks. Bye.